Well, one stock that's facing the heat because of not such a hot quarter is actually LG Electronics. We saw flat revenue growth from the company, and there was a lot of EBITDA margin compression as well. Actually, at the EBITDA level as well as the gross level, there was a margin pressure that showed up. So let's get in Sanjay Chitkara, Chief Sales Officer, and Atul Khanna, Chief Accounting Officer at LG Electronics, to better understand the business dynamics. Gentlemen, thanks so much for joining in. Mr. Chitkara, maybe, I mean, either one, maybe you can open and tell us what really happened, because we've seen pressure across the board. So at the top line level, both on the entertainment side of your business and the home appliances side, things are flat to slightly, very, very slight growth coming in. And then the margin pressure, I mean, 350 basis points EBITDA pressure. So just walk us through why it was such a challenging quarter.
So actually, our short-term numbers are just a reflection of timing shift, and there is no as such business weakness. As we all know, our industry faced a cool summer this year, geopolitical tension, tariff escalations, and on top of it, uh, there was a timing gap of GST implementation. The GST was announced on 15th of August, but implemented on 22nd of September. So there was a deferment of purchase by customers and partners. And once the transition was over, the partners and customers started buying. So it was just a timing gap. As such, there was no business issue. And if you see, within 1.5 months, we covered the entire quarter turnover and grew also. So if we improved also our market share during this period. Our refrigerator, TV, air conditioners market share have been improved. Our brand strength is at its peak. In
You're
September, we
talking
created
just
a
to
highest gap with company brand.
Yeah, just to get the period right. So you're saying that post the GST rollout, what you're saying, this improvement in market share, etc. Are you talking about October?
No. I'm talking about YTD September. Since the business conditions were tough, that was the best way that we improve our market share. So there was an improvement of our market share. In TV, we improved 1.4%. Refrigerator improvement is 1%, and air conditioner we improved by 0.5%
Which
of our
is,
market share
which is great.
up till September.
No, which is great. But what we're trying to understand is that this lack of growth on the top line, was it only a Q2 phenomena because of maybe a lot of rain and unseasonal monsoon or extended monsoon, and obviously there was a GST transition happening, or is it still extending? What is your projection on growth in Q3 and Q4?
We have already surpassed the toughest phase of GST transition. And now the inventories of our partners is also normalized. And our brand health is very good. As I mentioned, we improved our market share. And after GST cut, the affordability of our product and sentiments of consumers are very high. And next year, the calendar year, the new B-star rating guideline will come, and the additional cost of new energy efficient products has been already absorbed by GST cut. So this additional cost will not go to customers. So things are very positive, and we are very optimistic. Things will fall in place.
All right, got it. All right. Hi, Sanjay and Atul, and good to have you on the show. And I like what you said. You're optimistic about the future. So that's pretty good news. Now, a lot of your investors out there would like to get a broad guidance on the way ahead. At the half-year mark, well, revenues are more or less flattish. Margins are holding ballpark close to around 10% or thereabouts. But as you said, difficult phase over. Way ahead is good. So for the year, what kind of growth should the investors pencil in, given that inventory levels as well in the system have cooled off? The last quarter was marred by product mix as well on the margin front. For the year, what kind of revenue growth should we look at? And should you get back to that 12-13% margin at least?
If you see our CAGR growth, it was roughly around 13.1% from financial year 2022 onwards. And we have been registering a double-digit EBITDA. During this quarter, we invested ahead of festivals in our channel promotion and GTM costs. So we have now rationalized our promotion intensity. We have also taken a price increase in refrigerator and washing machine in the tune of 1.5 to 2%. And the ongoing localization efforts are still going on. So we are very positive that very soon we will achieve to our sustainable levels.
So sustainable
We
is
never,
so you have
we
grown in
never
double digits for the in the past. So you're saying you'll continue that trajectory, right?
Yeah, so we have still half of this financial year ahead. And being a sales leader, we will definitely like to catch our previous performance. And we have never pushed the short-term margin tactics or growth tactics. Our strategy has been always a long-term because the market share drives your revenue and revenue drives your profits. And as I mentioned, recently
Yeah.
we improved our market share. So we expanded that advantage.
Sanjay and Atul, thanks very much for joining us, Prashant here. And I was just joking here with Surabhi and Nigel that I have a refrigerator, 15-year-old LG, and still working fine. It's good brand advertisement for you, but I think
Because you're not buying another one now. That's the thing, Prashant.
Customer like you are, we are sure such
No, but
kind of result.
I'll tell you what. When you have all these people who come in now, I mean, service and this, say, पहले वाला नहीं बनता अब. LG के बारे में नहीं, but generally across white good products, So that's generally a broad feature which I think a lot of, this is anecdotal more than anything else. I want to talk about ACs in that sense. Atul, if you want to come in, we were hearing from many other players as well that AC inventory is very, very large in the system, and that will take some time to run down. Unseasonal rains, etc., have not helped. Where are we at on ACs, Atul?
For AC inventory, yes, you are right that during the cool summer of Q1, which carries some a high inventory of air conditioners in Q2 as well, whereas the GST rate transition has given an impact post 22nd September, where the inventory level of air conditioners of our channel is also getting normalized. And one more important thing is that the new BE ratings are coming in effective January 26, where the manufacturer has to produce all their old stocks, and whereas the trade partners are allowed to sell those stocks in the market. So there would be a good combination of new BE rating stocks as well as the old rating stocks, which will give a boost to the air conditioner business, as the penetration level is currently around 12 to 13%, which is, as per the industry report, in a coming period, in next 3-4 years, it goes up to 19-20%. So there is a good room, and the government has also given a good booster to the especially air conditioners, which earlier was being treated as a luxury product. Now they are coming into a normal product category. They have reduced the GST rate to 18%, making it more affordable for the consumers. So this is a good sign as an economy as well as for the industry. So our inventory level is also normalizing, and we are hopeful that we will get more better sell-out positions in the market.
Okay. All right, gentlemen, we'll leave it on that note. Thank you very much for joining in, and I look forward to talking to you again through the year. And let's see, hopefully the second half ends up being better and stronger. Okay.